This acceleration in trading of metal promises and the disappearance of visible metal stockpiles are pointing to the fact that Gresham's law is taking root, is starting to dominate these markets, and the metal is being swept away, leaving only the digital contracts swirling around on these exchanges.
Hey guys, welcome back. I'm very excited to have back on the line David Jensen. His work appears at safehaven.com and at gold-eagle.com. He's a precious metals analyst and a mining executive, which I find very interesting. I didn't know that about David. We were just having a pre-discussion, and it's a real thrill to have him back. David and I last spoke on April 22nd, and boy, have things changed just since then. David, welcome back.
Hi, Sean. Great to be back.
Hey, great to have you. My goodness, David, have things changed. Okay, so the last time we spoke, the SGE gold fix was just going into effect on April 19th. We can get there in this conversation. We'll circle back to China. Boy, it seems like all things gold and silver are circling back to China. But let's start with the Comex. Registered silver inventories have plunged to an all-time low. And the last time inventories, David, got this low, as you know, was in 2011 when silver was pushing $50 an ounce. And Andy Hoffman says, a perfect storm of surging demand, plunging supply, and vanishing above-ground inventories is upon us, end quote. And in your email to me, you said the same thing. You wrote, silver inventories are disappearing. What do you think's going on over at the Comex?
Well, I think it's the same thing that's happening in London as well. These are the two primary Western markets. And what we're seeing is increasing trading volumes and disappearing inventories in silver and gold. I think it's New York is not a physical market, if you want to call it that. If you look at the rule book, there's the directors of the Comex have numerous ways to force acceptance of cash settlement. But London is supposed to be a physical market, and we've seen gold inventories, which are visible there, disappearing, and now the silver inventories, from New York have disappeared. And I guess you can really look at these not really as gold and silver markets, which they should be, but because they're trading in promises, I really look at the two markets as metals theater. They present prices for based on supposed trading of metal, but they're really bets on promises. And so, what is that? It's really meaningless if you think about that for a period of time. You're supposed to have price discovery based on trading the assets themselves, and when you're trading spot contracts and forwards in London and futures in New York, based on these promises to deliver, it really becomes meaningless. So what it appears to me, Sean, is that the metal is being swept away as we predicted, last year. That it looks like these markets are heading for a breakdown, and it looks like it's accelerating now. And I would believe that this would accelerate into some kind of a financial crisis as well, because of the relationship of gold and silver to interest rates in the bond market.
Well, the last time we spoke, David, we talked about the post-paper, post-LBMA era. So we should bridge over to the LBMA here, but I guess in an effort to do that, I want to ask you this about Soros. We're hearing a lot about Soros buying gold, Soros getting out of stocks. But you know how Soros is buying gold? He's buying paper products. He's actually propping up this criminal paper system to some extent, and he's not even buying the stuff in physical form. What do you make of the news that Soros is, quote-unquote, buying gold? And then tell us about what's going on over at the LBMA.
Yeah, I think what Soros does is irrelevant. He works for the Rothschilds' banking interests. He's not an entity unto himself. His history of running the Quantum Fund was one where he was really representing other interests and investing monies, the wealthy elite in the UK and the US. So what Soros does day to day to me is I don't pay attention to it. The game here has been to accumulate physical metal over decades, likely since the creation of the Federal Reserve, because when you create these fiat money systems, they always end in tears. And so I really don't pay attention to what he's doing on a day-to-day basis. On the LBMA, we're seeing accelerating trading volumes in silver, and they're now trading to about 1.75 billion ounces of silver per day versus annual mine production, which is roughly half that number. But we're seeing now the volume is picking up to levels seen once in 2014, and then before that back in 2011, as you mentioned earlier, with the Comex when silver was $49 an ounce. So we're seeing this acceleration now, and really the numbers that we're getting out of the LBMA that I'm basing these numbers on they present monthly net settled clearing statistics. And those numbers are multiplied by a 10 factor, which the LBMA identified in their local London liquidity survey from 2011. And they said that 10x number was really a conservative number because they only got responses from 65% of their LBMA trading members. So that 10 times could be is larger in all likelihood, and it may well be much larger. We really don't know. But what we're seeing here is that this acceleration in trading of metal promises and the disappearance of visible metal stockpiles are pointing to the fact that Gresham's law is taking root, is starting to dominate these markets, and the metal is being swept away, leaving only the digital contracts swirling around on these exchanges.
Yeah, Gresham's law, the bad money chases out the good money. People are getting the good money. The smart money is getting the physical metal. We know that. And you noted to me here, as it pertains to the LBMA, that the global gold stockpiles are in the billions of ounces, but the silver stockpiles are only about 1 billion ounces and perhaps far lower. You note that the silver spot claims in London are estimated at 3.7 billion to 5.2 billion ounces, or 350 to 500% of visible silver stockpiles. This is a run on the banks. This is a run on the bullion banks.
Yeah, it's a run on a Ponzi. Really, when you look at the silver, the silver is the most critical. If we look at the work that Bullion Star did on the gold market, they identified that the gold had been swept out of London in 2013, and Bloomberg reported on this as well. The vaults were empty. Now, with the estimated spot contract open interest of between 350 and 500 million ounces, based on April 2016 trading volumes, that would be roughly 10 to 15% of global gold stockpiles, refined stockpiles. But the silver number is the one that we can just see how baseless it is in terms of the claims in the market and how fraudulent that market must be when you've got 3.7 to 5.2 billion ounces of claims in that market, and we know that all of the world's refined silver stockpiles are in round numbers around 1 billion ounces, including all the ETFs and everything else. So this is where we can see how broken down things are. And I find it really interesting, Sean, that since the beginning of 2016, we've seen a run on the equities, on the silver and gold producers that have real assets in safe geopolitical jurisdictions. And there are numerous gold and silver development companies, exploration and development, as well as junior and intermediate producers that are up 300 to 600% during this period. And this is the response that I'm expecting. If the metal is not in London, if all these sovereign wealth funds and pension funds and in private investors and corporate interests and banks are holding these spot claims in London, as they come to understand that they're only holding promises, they're going to say, okay, where do we actually get exposure to this metal? And that exposure would be in the miners that are holding real assets. Now, the quality of that asset is not as good as holding the bullion itself in a physical form, but it's a proxy for exposure to the upside for the metals themselves, or for the protection, really. I really don't like to look at it as an investment. I look at it as an insurance policy and holding money itself, because I think that these fiat money schemes always fail, and they force the hands of governments, and really the market itself goes back to the 4,000-year choice of money, which is gold and silver. There's a much longer history of metal being sound money and real money, as opposed to the fiat paper debt-based paper cycle that we're in.
Amen. This is why I love you, David. I mean, you've already mentioned the Rothschilds and the relationship with Soros. I love that. I've made that point myself many times. And, as it pertains to the GDX, the GDXJ, the mining stocks move that we've seen this year, strong management teams is key when picking stocks and verifying what's in the ground, verifying their access to the metal, verifying that the production numbers are real, and then you can get the leverage. What the mining stocks, I think, are allowing the smart money to get, David, is a big discount, in some cases a huge discount.
Right.
And I mean, that's really just a great way to play this thing, at least with some of your money, don't you think?
For a portion, I mean, it's really a proxy for gold and silver. It's not the real thing.
Right.
So it gives you leverage. It gives you some exposure. You're always exposed to confiscation, holding that, and there's always geopolitical risk and management risk and project risk and execution risk. There's all kinds of risks that you're exposed to holding shares versus holding the metal. But it's the obvious next step to take upon realization that you can't really get the metal at the exchanges.
Yeah, and I should really clarify my position on this. I do think that a small amount of money allocated to good mining companies makes sense in a portfolio. I come a little bit full circle on that to the extent that I was absolutely annihilated in
Yeah,
precious metal stocks, obviously since
sure.
2011, the meltdown
Yeah,
from there. And other pundits we speak to, like Andy Hoffman, he swears off all stocks entirely. So does Bix Weir, because we know that the DTCC tasked with settling these billions and billions of trades every day.
yeah,
Most of these trades aren't getting settled. So if and
yeah.
when this paper Ponzi in the stock market falls apart, people could be left holding just paper promises as it pertains to their stocks too.
Well, you can take delivery of the stock certs, and
Right.
it's not that difficult to process. So you can get the certificates, and I recommend that for people who are long-term buyers and holders of the certificates. They're mobile, and you can put them with a safe place, or with people that you trust or places that you trust, and hold on to them. You're a registered shareholder that way too, so you can attend AGMs, and I actually attended the Gold Corp AGM, and I had quite an interesting experience there back in April. So maybe you and I can talk about that next time we get together here online.
Yeah, terrific. And maybe you could share more about your background. Again, I didn't know that you had run a mining company in the past. I just knew you as David Jensen, the writer, the precious metals analyst. So would love to know more about your background. I'm sure the audience would too. If you want to get into that now, terrific. Otherwise, we'll pick that up next time. But before we lose you, I do want to talk about the SGE. The SGE Gold Fix was just going into effect on April 19th. Our interview posted on April 22nd. What do you make of what's going on at the SGE? Any news for us?
Yeah, well, I expected that there would be some kind of cooperation between the Chinese and the London financial centers, and that appears to be the case. There's a very good article posted at Bullion Star about this, and what we've seen is that the ICBC Standard Bank, so ICBC, which is the Chinese commercial bank, the largest of the banks, bought Standard Bank, and they are now brought into the physical committee and are now on the LBMA as well. And so what we're seeing here is cooperation between London and China. I'm sure there's quid pro quos going on there. The UK did come out and say that they thought that the Chinese renminbi would be the next world reserve currency. They said that, I believe, in 2014. So there's been cooperation between these two entities, even though there's a long history of enmity between them. But we're definitely seeing pressure in the physical market, and I think that's the interesting thing, is that there have been from time to time premia in the Shanghai Gold Exchange. I haven't checked them recently, but I'm expecting to see it build over time. But what I really think is notable here is the disappearing physical inventories, as we would expect, and an increasing spread between the Shanghai Gold Exchange prices and the LBMA paper price and the New York paper price. So we'll see how it develops with time. These things always take much longer than you would expect, but they are really putting the pieces in place now to turn to a new style of market. I think that every effort is going to be made to save the London market, because it really is the heart of your financial district. I don't think they're going to be able to, because of the history of deception there, and the market gives a wide berth to deceptive markets. The Souk Almanac in Kuwait, which was the Kuwait camel market, is no longer trading shares at any notable level. They were once the second biggest exchange in the world, and the giant fraud was run there in the early 1980s. And I think London's going to be turned into the next Kuwait camel market. I just don't see people giving their gold into that market or their silver into that market and trusting it anymore, given the history of what I see as very deceptive practice there.
So, David, as we wrap up here, you mentioned that the Chinese bank ICBC bought Standard Bank, and it's sort of it's their entree into the Western market and this cooperation with the LBMA. Do you think that this quote-unquote cooperation with the LBMA is just cooperation to prevent a WTC7 style demolition and instant crash of the LBMA, and instead what they want to do is sort of dismantle it brick by brick? Because clearly the end is near for the LBMA as it is for the Comex.
Yeah. Well, I mean, Peter Schiff had a great line once. You can't taper a Ponzi, and I think what there's every effort to do here is to bring it down in for a controlled crash landing to bring it back. But the markets, when they discover fraud, they turn hard, and I don't think that the Chinese don't want to be blamed for this, and I don't blame them. It's the basis for war. Wars have been fought over much less than this, and you can blame the Chinese for bringing down the Western financial system. Using the rocketing metals prices in London, and because historically we've seen a connection between rising metals prices, especially rapidly rising metals prices, and rising interest rates, which would bring down a $200 trillion global bond market. The Chinese, I'm sure, are trying to work this, but I really don't think that you're going to be able to do it in any kind of a reasonable manner. What we need is an organized write-down of global debt and a reinstitution of sound money if you want to prevent a crash, and it's time to do that. I just don't see that the financial interests, they're more interested in trying to maintain a position of control and the benefits of this type of a system. But we'll see where it goes from here. But I just don't see any ability to manage a fiat gold system or a fiat silver system, a paper system. It has to be reformed, and it needs a stepwise change. When the market turns on you, there's no ability to fight back a tidal wave of market decision.
Well, you said at the beginning of this interview, and I wrote the quote down because it's an excellent one. You said, when you create these fiat money systems, they always end in tears. And I think that's where we're headed. We're headed there globally. We're certainly headed there as it pertains to the yen in Japan. We're headed there as it pertains to, well, look what's going on in Venezuela, my God. And we'll just wrap it up with your final thoughts on the U.S. dollar. You mentioned the Rothschilds earlier. I often mention the 1988 cover of The Economist magazine, the Rothschild publication, in which they show that phoenix rising from a burning pile of ashes. Around the phoenix's neck is a gold medallion. It says 2018, and the headline was "Get ready for a world currency." Final thoughts. Your thoughts on the dollar?
Well, the Financial Times had an article, Martin Wolf, who works for the FT, and I really look at the FT, it's not in the business of news, but it's in the business of advertising, and they really give you the opinion that they want you to hear, and at this very late moment now, Martin Wolf is saying that we're headed for a disaster. Alan Greenspan said that about two weeks ago now. Mervyn King, the former head of the Bank of England, is warning us that we're heading for a crisis. Bill Gross is saying that the global bond market is going to burn up like a supernova. We're seeing Abe, the president of Japan, at the G20 meeting said that we're heading to a global crisis, a Lehman-style crisis. So we're seeing on multiple fronts warnings that this is coming to a close and that we're approaching a crisis point. And I just would like to see as many people out there take steps to protect themselves, because it's going to be a massive event. They printed money after the Lehman Brothers crisis and didn't deal with the underlying issue, which was 350% of debt versus global GDP out there. And it's a serious problem that we have, and we need to address it, and address it in the short term. And knowing the inept people in government and the interests that they represent have other ideas on their mind typically than averting crisis. It's usually to profit and to increase control using the crises, not letting a good crisis go to waste, as Rahm Emanuel, who worked for President Obama, used to say. So I just encourage people to take the steps that they can take to protect themselves. It's going to be a very difficult time, and I wouldn't look at it as an opportunity to profit, but one in which you want to prevent try to prevent balance to your personal life and to your balance sheet.
Yeah, we're talking about finding a lifeboat, guys, because, again, why do we have these conversations? Why is SGT Report referred to as the corporate propaganda antidote because we seek truth. And this isn't fear-mongering, guys. This is lifeboat time, and it reminds me of the orchestra playing on the Titanic. It was going down. It was time to get in a lifeboat. And just like the Mockingbird mainstream financial media in the United States, CNBC and the rest of them, they're just playing music as the Titanic is going down. It's time to get a lifeboat. David, I can't thank you enough for your time. This was really a fantastic conversation. Can you tell people how to find your work? Tell us a little bit more.
Sure, you can find it at safehaven.com. Gold Eagle is also starting to post that work as well. So, but the full summary of my articles is posted at Safe Haven, and numerous other places like 24 Hour Gold and other places pick it up when it's posted. So, I look forward to connecting with people. I do read the comments on YouTube after the conversations, and I give the odd comment there as well. So, I look forward to connecting with people and hearing your thoughts.
Oh, fantastic. Well, guys, please do comment. And if you appreciated this interview with David Jensen, please do give us a like. Share it with your friends, family, and colleagues. This is factual information. This is hardcore data. This is the real deal. Please do share it with those you love. I've said it before. I'll say it again. I think time is running short. I want to thank each and every one of you for tuning in. We appreciate your support at sgtreport.com and thelibertymill.com. Real news 24/7. I hope you all have a wonderful week ahead. May God bless you and your family. Thanks for listening.